I think when it comes to designing retirement income, you have to think about taxes in the given year that you're in, but most importantly, thinking about the longevity of the tax through the course of the family and through the next generation as it comes to planning. And here's what I'm talking about. In the given tax year, we want to understand how much income we're pushing out to the family because we don't want to push ourselves to meaningfully higher brackets if we can stay away from that. Okay, so that's the first kind of objective to pay attention to, and that's a very simple calculation. From there, though, how do we look out into the future, right, through mom and dad's life all the way down to their kids, and say, how do we responsibly keep this account from getting way out of control and ultimately ending up being a huge future tax liability? And I'll say a lot of retirees push taking retirement distributions, i.e., money from their IRAs, out to RMD. And they let the first 5 or 7 years of retirement go and just grow those assets. Then what happens at 73 is typically the RMD is a lot more money than what they need to take out of the IRA for their lifestyle, and that pushes taxes higher, and that usually cycle continues. If your RMD is high at 73, it's probably not going to be much lower at 74 unless you had a big kind of market pullback, but hopefully those are, few and far between. So understanding that we want to actually start to smooth out the income coming out and thinking about can we get those IRA assets to somewhat plateau, right? They grow, we take the money out. They grow, we take the money out. And then ultimately, as we pass them to the next gen, we're not just ballooning up this IRA that ends up being a tax liability and has to be shut down in 10 years for your beneficiaries.